All right, guys, good morning and happy Monday. It is March 14th. I'm going to keep it short and sweet this morning. I got the opening session, the long session, over in the options room. But we'll touch on a few, I think, important things here. Then, as usual, if you got any charts you'd like to take a look at, put that in the chat here, and we shall go through them. But yeah, heading into this week, which is going to be an interesting one. We'll hear from the Fed, I believe, on Wednesday. And then you do have the quad witch expiration. So it won't be dull. It won't be dull. But in terms of structure, nothing has changed here. Just keep in mind, like these bounces, so call it the bear market bounce. When we get that oversold, those short squeezes, they're nasty. So we're in a downtrend. I think we're going to continue to trade lower. Just be a little careful about getting short down here. Don't be a part of, the short squeeze. If anything, let them squeeze the shorts. Then we're trying to short the 21. But the structure hasn't changed here. There's a bearish daily squeeze for the S&Ps. Got the bearish daily squeeze here for the Qs, bearish daily squeeze for the small caps, the bearish daily squeeze for the Dow Jones. And in terms of what makes this squeeze bearish, they're under the moving averages. There's negatively stacked EMAs. There's red 10x bars. And in the case of the S&Ps, the Qs, and the small caps, there's also a negative histogram. Pretty much just a complete opposite structure of generally the squeezes that we were trading in 2020 and 2021. The script is kind of flipped here. So in my opinion, until something changes, we're going to continue to look to short the bounces in the bearish trends and structures, which is kind of everything. But for the few spots that still have bullish trend and structure, we'll keep on buying those dips. So in terms of where to get long, or at least I think, here's where I'm looking to get long. Energy and oil. So you get the pullback here in crude oil. It might take a bit. Might have to chop around the 21 EMA, but at some point, I think you look for that trend to continue off the 21. So should that unfold, as extended as it is, energy is going to keep on trading higher. So a few names that we like here. And we got long both of these last week in a few of the rooms over at Simpler. A little bit of Devon, a little bit of DVN, and a little bit of EOG action. Chevron would be a good candidate if it could pull back. There's FANG, pretty good structure. There's MPC, actually looks really good. But there's your bullish, I think, buy the dip opportunities, energy and oil. Because if you look at the semis, I don't want to buy a dip in something with that bearish daily squeeze and the sell signals. So that kind of, in terms of buy the dip, the semis are off the list here. Big Tech XLK is off the list. Let's kind of run through them here. There's healthcare daily squeeze under the 21, sell signal, stacked EMAs, negatively stacked EMAs. So I'm not going to try to get long healthcare here. And you look at the transports, you look at real estate, you look at communications. Pretty much here, outside of energy, everything else has sell signals. So keep on shorting those bounces. But a few names I do want to cover here. In terms of the downside, in addition to possibly getting long energy oil, if I could type. And to be honest, I don't really think you want to short it here. But if we get a bounce, if we happen to get a bounce here, I think Intel's going to head back down to that recent low around 43.44. So we're shorting this last week near the 21. 46 is kind of the key level there, which it broke into Friday's close. So I'm going to watch this today in terms of, maybe adding to the position. But I think any good bounce here could set up a nice short entry. So we got a little bit of Intel. Then there's names like Snapchat. We took profits here last week. If that could bounce, we'll short it again. Something like an Uber. The weekly and the daily are just nasty. very nasty. Negatively stacked EMAs, red 10x bars. So shorted that a couple times. We'll do it again. It can bounce. But one interesting name here, I think, is Tesla. You got to keep in mind, if the S&Ps and the Qs, if they put in a bottom and just rip back towards the upside, you're probably not going to have much luck shorting anything. As goes the market, goes the stocks. But for now, you got bearish daily squeezes, 3-day squeezes, weekly squeezes in the indexes. Kind of suggests more downside. So then you jump to Tesla here. I do think it can happen pretty quick. I think you have like a $50, $60 average true range move. So you could get here pretty quick. But I think liable for another move back down towards 700. You have the bearish daily squeeze. And keep in mind, you haven't been back above that 21 on a closing basis since mid-January. So bearish daily squeeze. If we crank it up to a 2-day, there's that bearish 2-day squeeze. Here's your 3-day squeeze already firing short. And then you got the big whopper. Big bad weekly squeeze. It hasn't fired short just yet. So if the market rips higher, you probably get a bounce in Tesla. I think to the extent that bounce doesn't take it back above the 21, probably sets up a good short. So we're watching some Tesla here, and then the bigs on Amazon. Like I covered in last night's video, the oldest trick in the book, the 20-for-1 stock split out of nowhere, doesn't do it any good in terms of structure. So you kind of go through the list of issues here. High compression monthly squeeze. We're kind of going on month 2 under the 21. We all know there's the bearish weekly squeeze. Only 2 weeks in the fire and short. Then you got the 3-day squeeze. Then there's the 2-day. That big gap up on the stock split news just takes you into the 21. You fail once, it fails twice. It'll trade higher if the Qs rip. But if the overall trend here continues to be to the downside, I think at some point you could get Amazon back into about 2,500. Which lines up here with that the weekly 200. So just taking the rule of thumb that old Johnny Carter has taught us all, once a squeeze fires short, you might get 5, 6 plus weeks of momentum. So 2 weeks in here, I think you could get another 2 to 3. Just got to keep in mind in this kind of market, here's where you short Amazon. So it's not to say that shorting Amazon works at all. Just don't short it down there. You're like 10% off the 21 or something like that. You're at key support. If you're selling a call credit spread down there, like there's no premium. So it's kind of tough to think you're getting a good bang for your buck. And if you're buying puts down here, I mean, they're expensive. It's Amazon. They're expensive to begin with, but a little bit more expensive back here. So it's not to say shorting it works, but there's where you short it. Put a nice tight stop around it, and you might have room all the way down to 25 hundo. So watching some Amazon, watching some Apple, some Tesla rather, but you look at Google. Google doesn't look any better. It's violent, and if you're swing trading a short, it's not enjoyable to sit through. But we do got to look at the indexes, and a lot of names like Google right now and say, this is kind of, it fits the script. You flush from the 21, you rally back to it, you flush, you rally back to it, you flush, you rally back to it. It's nasty, right? It's violent. We flush, get that reversion to the mean, get the next flush. So I think when you just kind of look at the charts here, on the weekend, outside of, the action, so to say, it all kind of strikes me, at least, as the ebbs and flows of a bearish trend. It's very similar to your bullish market. Push off the 21, rally back to it. So things to keep in mind there. But that in a nutshell, good people, is what I got for you. It's all kind of straightforward. You short just about anything right now. It probably works if the S&Ps and the Qs and the whole gang takes out the lows. If we rip, everything probably rips. So we'll be shorting bounces, things that look like this, and we'll be getting long things like energy, oil, pretty much until that stops working here. But a few key levels of support for you, and then I'll see if you guys get anything you want to take a look at. But we're basically just working key numbers here. Big, sexy key numbers. So 4,200. Then you got your 41 hundo at that recent low, and then you got 4K. If we can take out 2, I think we could flush to 41. I don't think it's going to be a straight shot, but those are 3 big levels of support, 42, 41, and then you got the big 4. One more chart here, possibly one of the more important charts, is the VIX. You get that flush in volatility. Basically for a few days there last week, there's the market's green light to try to put in a bounce. So VIX comes in, the shorts get squeezed, but in terms of the VIX itself, that might have just been like a healthy reset. Come on back home, build up just a little bit of energy here. If this thing just like launches itself back off the 21, and we're heading back towards 34, 35, 36, 38, then I think at that point you're going to see the market making a new low. We're trying to crack through key support a few times last week. VIX is kind of testing key resistance. It gets a little bit tired up here, so to say. It's a little bit of a different situation now. VIX kind of resets. So now this thing can lock and load, right? Build up all that energy it needs. And now we're testing key support. So the last few times we're trying to break through this 42, we're doing it on elevated volatility. VIX is a little tired. Now we're back at 42. Potentially, your VIX is kind of locked and loaded here, setting up for another rip. So all things to pay attention to. But we are going into the session here today. Shorts in my WM. We got a short on Intel. And then some Devin in EOG to the upside. But yeah, I'll jump in the chat here if you guys get any questions. I do got to pop in the options room here in a bit. So let's see what y'all have got this morning. Hey, what's up, Mime? What's up, Terry? Wilkin, yeah, we'll take a look at Apple. So, of course, Apple's going to move with the Qs. And as soon as Thinkorswim unfreezes here, I promise we'll take a look at Apple. Never a good sign this early in the week. But yeah, before we can pull the chart up here, so in terms of Apple, you got to watch that 200 SMA. That starts to break. I think you could see Apple down to 140. Here we go. Thank you. Yeah, so for the big Apple here, pretty textbook. In terms of what to expect in a bearish trend, big flush, big reversion to the mean, then you start making your next leg to the downside. The line in the sand here is your 200 SMA. So we took profits on Thursday, left a little bit of money on the table, but if this were to bounce again, we would look to short it again. To me, the most interesting thing here is actually the monthly chart. So, the S&Ps, the Qs, Google, Tesla, a lot of names in this market, what we're seeing is they fired a huge monthly squeeze back in 2020. And as that monthly squeeze kind of dies here, what we're starting to see is for the names that take out that monthly AEMA, they're kind of getting that monthly reversion to the mean. Pull back all the way to the monthly 21. So Tesla, I think Tesla goes back down. but it already did it. Monthly squeeze fires, monthly squeeze dies in terms of momentum. Then you take out your 8. Sets up the reversion to the mean. Let's look at a few more like Google. Yeah. So you got to look at this like a daily chart. Build up energy, release energy, lose energy, lose the 8, dip to the 21. S&Ps have essentially done it. And I think there's more downside, but if anything, Apple could remain in a bigger picture bullish trend all the way down to 140. So you kind of got those two levels there. If you can break that daily 200, I think you can catch a nice nice $5-10. But as we know, it comes down to the Qs here. Always comes down to the Qs. Just also keep in mind this week, right? Quad witch, expiration. You got the Fed, and you got a whole lot going on out here in the world. Won't be dull. Hey, what's up, NK? AZN, J&J. How's Johnson & Johnson doing? Good call out. Good chart. Yeah, good call out. J&J. That's beautiful, actually. I don't think I've ever seen this, but it speaks the language. The squeeze. Great looking move there. Good stuff, MK. Very good stuff. Very clean. Very clean. Hey, what's up? Good morning, Mike. Crowd. This one's a tough call right now. It's a tough call. For me, at least, it's kind of tough to get context in this daily chart. Really, really choppy here. So where I think we can get some kind of clarity is looking at the weekly chart. And to me, it does give a little bit of clarity. We're bigger picture-wise here. Kind of in a weekly downtrend. So now the question is, have we put in a bottom, and is that downtrend over? For crowd to kind of prove that, it's got to get a close here back above the weekly 21. Otherwise, get the flush, get the rip, get the flush. You might head back down to support, around 150-ish. So that, to me, I think is a little bit clearer. And then you line those levels up here on our daily chart, where you can see last time that we kind of ripped to this level, couldn't quite crack that weekly 21, so we came right back down to support. Couldn't quite crack the weekly 21, right back down to support. So could be a bit of the same here. Could be a bit of the same. Hey, good morning, Antonio. LAND. Nice chart. Nice chart. In terms of an entry, I mean, for me at this point, the ship has kind of sailed. But I would love to buy a pullback. What you could do here, because this thing kind of looks like a runaway train, is you could try to find your spot on that runaway train, with the understanding it's a little bit extended at this point, but if you're looking for continuation, it's a nice 15-minute squeeze here. I could fire long and keep the party going. So my style of trading would probably have me looking to buy the dip. But if you are looking for continuation up into 37, 38, 40, I think you're waiting for these little squeezes along the way. A little break in the action. Could be the spot to jump in. Yeah, good question here. So Amazon, and remember, if the Qs are all of a sudden back here at 15K, Amazon's going to have made a pretty big move to the upside. As goes the market, goes the stocks. My thinking here, just in terms of structure, is you got a gap to fill. And I think in the absence of any kind of strength in the Qs, that's just kind of the path that Amazon's laid out for itself here. Weekly chart kind of suggests we keep trending lower. This 3-day squeeze that just fired short. It's a daily chart. Where's the 3-day? Get the 3-day squeeze. So I think in the absence of any strength from the indexes, the structure of a lot of different time frames here just kind of suggests you got a gap to fill. It'll get something going here if the Qs try to get something going. In terms of a move to the upside, for me, where Amazon is bullish again, in a bigger picture sense, would be back above the weekly 21. Because to me, that's the ultimate short the bounce move. For short in Amazon, that bounce into the weekly 21, we probably took profits a while ago. In the shorter term, though, as long as we're under that daily 21 with the negatively stacked EMAs, you got some room there. Got some room. Hey, what's up, Robert? UPS, LOW, and Oxy. Okay, so you're short. Let me see. It's a tough level here. You're at your 200, which kind of makes me like the short a bit more, because if you can break it, you probably get a pretty nice flush. If we just got rid of the 200 SMA, under the 21, daily squeeze, you got sell signals, you got the rejection at the mean. I like that for a short. LOW. It's probably going to be the same fight here. Got sell signals as negatively stacked EMAs. So in terms of a directional trade here, I don't think it's the kind of thing we would want to get long. So I'd go with the short here as well. You just got to crack through that 200. Should give you a good flush if it can. And then in terms of the Oxy here, the Oxy. Nice move. Nice move. I mean, I'm always going to prefer the entry back here. Does this pull back to 48? That might be a little bit tough. So I think all you got to do here is just kind of drill it down to a 2-hour, 60-minute. You got a lot to like here. 2-hour down to the 5-minute with some squeeze action. Nice 1-hour squeeze. So these energy names, energy oil, that whole space, they're extended. I think we all know that. But if you're trying to play that continuation, I think one of the best ways is wait for that 15-minute squeeze, wait for that 30-minute squeeze. That's where you kind of latch on, keep on riding that wave. So with Oxy, I think you got the same thing going. Pretty extended, but the whole group is extended. And they're probably only going to get more extended if crude oil here ends up giving you new highs off the 21. So I like Oxy. A little extended, but signs of the times. Signs of the times. Neil, DWAC. Anchor to your weekly 21. Because that daily structure is getting a little bit iffy here. Pretty quickly, 21 EMA is sloping to the downside. There's a daily squeeze firing short with a negative histogram. But if we take it to a weekly chart, it's kind of overdue. You're up here at like two or so average true range moves above the 21 since January. And it's kind of due for the reversion to the mean. So now the key is, do we have, call it 65. If 65 holds up, not that I think it would be immediate, but just in terms of the trend, right? You get the big rip. You come back into the 21. Now you might sit here for 1, 2, 3, 4, 5, 6, 7 weeks, but you're holding support in the structure. Then you get the continuation. So the first piece of the puzzle is the 65 hold as support. Then very much like back there, right, let's get rid of this negative histogram. Let's get back above the 21. Let's clean things up here. Then we can catch our next rip. So 65, I think, is key there. I think that is key. Hey, Robert, PSTG. Your storage, right? Big move. So yeah, earnings, huh? If you look to the left here, you got momentum everywhere. So the weekly and the daily charts have stacked DMAs, and they got some green 10x bars. So is it a little extended? Of course. But if you're looking for continuation into the highs, take it to a 60-minute chart. There's a brand new 60-minute squeeze. Well, it was extended back there as well. That little break in the action that gives you that new squeeze, that's where you can jump in and catch that continued push. So I think if you're looking for that shot into the highs here, you're going to wait for that time where you have that 60-minute, that 15-minute. The more the merrier. A couple squeezes to give you that lift off there. How are we doing on time here? All right, guys, last one here of the morning. Then I got to jump into the gold room. ABBV. Very nice chart. If you look at this chart, you've got no context as to what's going on with the overall market as of late. That's just one thing. If you're looking to get long in this market, keep that in mind. If you're looking at that chart and there's just no reflection of the volatility and all the back and forth that we've seen, that's exactly what you're looking for. That's why, the energy names, that's why they're attractive right now. If you look at those charts, you got no sense that the entire market's been breaking down. If you look at AbbVie here, you really wouldn't think the market's 20% off the highs. So very good chart here. Very good stuff. But all right, my friends, I appreciate your time this morning. Always good to kick the week off with you. Not going to be dull. So stay disciplined, stay patient. And I will be back on Wednesday, and we'll kind of pick up where we left off from. But for those of you in the gold room, I'll see you in a few minutes. And for the rest of you, trade well, and we'll talk soon. Travis, we're holding on here. We got to break those lows on the IWM. But we're holding on here. Got to get that break, and we'll be in good shape. But all right, peeps. Talk to y'all